Howdy, going great. How's everybody doing?
Good. All right, let's get started. So somehow it's already the holiday season. I have no idea how that happened, but we're here. This is our 36th real estate chat. We do these periodically on Thursdays at 11 a.m. with some of the top New York City real estate experts in New York City, and we try to get a sense of the market. And just briefly, why is what you're all doing here today so unique? Because there are a lot of other podcasts and panels out there, but we have just one goal, and that is to dissect what is happening right now in the New York City real estate market. And all those listening and your clients whom you may send this to, hopefully they can get an information edge by piecing together the various kind of finger on the pulse data points that the top experts on this panel are able to provide. So that's why I think this is just so unique. So today, like usual, we're having our panel of experts answer the question, what is going on with the New York City real estate market? I had an agent reach out to me the other day who's been in the business about as long as most of the agents on this panel, but it's not someone on the panel. And she said she's never seen it this slow before, which I found interesting. She said that she's including COVID, 9/11, the financial crisis. Now, my feet aren't on the ground anymore, as most of you know. So I'm super curious if you guys are seeing the same thing. I mean, obviously there's thousands of mini markets out there, so there's no right answer here. Some areas may be stronger than others, some weaker, of course, but I just cannot wait to hear the comments from you. So in addition to some of the finest real estate agents in the city on the panel, we also have Noah Rosenblatt with us today. He's the founder of Urban Digs, which is an amazing data analytics and market insights platform, which many real estate agents subscribe to. And just a reminder before we get started, if anyone wants a recording of these chats, since I know a lot of you don't use the Clubhouse app, feel free to just click on that link that you see above our faces. If you just click that and pop your email address in there, and I'll make sure that you get the recording of this call as well as any future calls that we do and the links to those calls. So about me, who am I? I'm Phil. I'm hosting today, and I've been a licensed real estate agent for 18 years, and I'm also the founder of Lease Break, which was founded in 2013. It's a free marketplace for shorter leases, sublets, and lease breaks in New York City. And I mentioned last time that we launched this new program for agents where agents can work with up to 150 renters per month that have asked to work with agents for just $10 a month. So it's this crazy deal that a lot of agents are subscribing to. Just go to leasebreak.com/lead for more info on that. And as Scotty was saying, don't forget you could share the room on social media. Bottom left-hand corner, there's a bunch of stuff that you can do, so feel free to do that. So let's get started. If everyone could first pull to refresh their screen, just so that we're all looking at the same order of speakers, that would be wonderful. And like normal, we'll start with Noah, and then we'll go in order with the agents. But let's start with Noah Rosenblatt from Urban Digs. He's one of the city's top real estate data experts, and many of you know Noah, or you have a subscription to his incredible real estate data platform called Urban Digs. But Noah, let's start with you. So what are you seeing out there right now, and how would you address the question, what is going on with New York City real estate right now?
Hey, Phil, thank you so much for having me. And it really is it's such an honor to be with an amazing group, all corners of the markets coming in here. So thank you. Always look forward to this. It's been a roller coaster ride, right? For like the last 10 months from the peak levels in earlier this year and, going through the whole shift. Second order derivative. The rate of change. That's what I see as the theme for today. When I look at everything, the pace of declines, the rate of the fall is all starting to normalize. It's like we fell from a high level at the peak of recovery, probably in Q1, maybe March or April. And we had this whole macro Fed terminal rate regime change, and we've shifted down, and now we're kind of finding our way at this lower level, right? That's what I see. We are not recovering heavily. We're also not aggressively falling. It's like we've fallen, and we're just starting to kind of pick ourselves back up. Now, this new lower level, it's not anywhere near where COVID was. It's slow. If I think about the relative shift, we peaked from a very high level in January, February, and March to the lowest levels now. That was a long fall. That if you stretch that whole fall down, it was longer and deeper than the whole COVID fall, which was kind of quicker and more fierce and then recovered quicker. So this has been a notable shift. It's happened. And I'll tell you something. We all know pricing data is lagging. So if you signed a deal in October and November and last week, we're not going to get that price discovery for another couple of months, right? So the latest reading on data has us down, I would say, about 6%. 6% median condo price per square foot. So there may be pockets
compared to last year.
No, from peak levels in like April.
Okay.
From peak levels in April. Okay, so we're down. That's like the shit. How much have we fallen? Like so far, that 6, which means all right, it could be four to 8, and the median 6, something like that, right? But here's the rub. That stops in August. I don't have September, October, November data in there yet, right? So when I asked my team, I said, you know what? Go put September in there. It bounced right up. It bounced right up. It no longer was going down. It bounced up. So I said, you know what? Let me go take a look at Q4. Let me take a look at Q4 and see all those closed sales that's happening in Q4. And let me just take a look at what's going on. Are we showing quarter to quarter price declines? Like everyone's thinking we're still going down. We're still going down in all the reports. And I looked at the Q4 data, and granted, this is the most important part. There's still 3 weeks left, right? So it's not complete yet, right? The data is showing mixed. Average sales price, okay, average sales price and median sales price and price per square foot, they're showing mixed. The only thing that's showing down, I believe, was median price per square foot was the only one that was showing down. Or actually, I think that was actually still showing up like 1%. It was surprising to the upside. And I couldn't believe it. I'm actually trying to load this data right now. I'm sorry I didn't have it ready, and it takes 5 seconds to load up. So I can give you the exact numbers. But up here, I got it right now. Okay, look. Average sales price quarter to quarter up 0.2%. Average price per square foot quarter to quarter up 8.5%. Median sales price quarter to quarter down 4.7%. Median price per square foot quarter to quarter up 1.3%. 3 of the 4 is up quarter to quarter. I don't think anyone expected this. So unless there's drastic change over the next 3 weeks, I would look forward to a Q4 report that suggests we're kind of bottoming and maybe even slightly bouncing off of that bottom as we speak right now. It's just interesting. We'll see how it plays out.
Questions. This is why the agent input's so important, because like the word mixed you use is why the agent's input's so important, because they're going to give us like the anecdotal kind of on the ground type of information. But I did have a question. It's been very helpful in the past when you kind of talked about this average volume that you expect in this month. And if you could just put that in context for us. So what do you usually expect in the month of December, say, or maybe you can't do December, it's not over yet, but say November.
Yeah.
And where does that compare relatively speaking?
Okay, so that's where we're depressed, right? So December, if we count last December into this average, I think we did 1,100 deals in December, where we're supposed to do around 780. Like the number is 754, but that doesn't count the 1,100 we had last year. So it's going to pull it up. So I don't know, call the average 780, 775. I don't know. We'll have to find out at the end of the month. So it's somewhere in the upper 700s. And right now, if I go take a look at let me take a look at the dashboard. If I look at 1 month, we're at 660. So we're below trend, but we're not in active aggressive fall. We're in seasonal fall. We've already had the macro shift. And that's kind of what I'm saying is if you look at what happened between June, July, August, like that was the bulk of the shift down. And then much of September, October, November is really the bottom formation, zigzag kind of, where are we? Oh, well, we found our new level. We're a little dazed and confused at this new level. And that's kind of where we're at.
Awesome. Okay, no, I'm sure we'll check back with you. I'm sure we'll have some other questions for you as we go. So let's move to the agents and get their input. And kind of how would they answer the question, what's going on with this New York City real estate market? I've also asked the agents to give me a number between 1 and 10, something new I'm trying this time. So a number between 1 and 10, with 1 being the strongest buyer's market you've seen in your career and 10 being a raging seller's market. And I'd love to know where we are. Again, there's no right or wrong answer. Every agent is seeing different things, but I think that'll be it will be interesting data to compare as we speak and take a group average kind of as we go and give a sense of this group as to where we are. So let's start with you, Antonio. What are you seeing right now in the real estate market? Would love to hear your thoughts.
It is. I think Noah nailed it when he said that we're stabilizing in terms of prices, and it's even going in an uptrend. But we brokers, what we really care about are transactions, right? So what I'm feeling, if I were, I'll go into a story, but in terms of numbers, last year I would say we were at 7, right? Remember, before the pandemic, we were already down. So and then it went to 8, right? Like around April, where we were doing about 1,200 contracts signed, and my team did a ton, right? And now we're doing from April to now November, it's instead of like 1,200 contracts signed per month, we're on average like 400-500 contracts signed, right? November and going to December. I think the people really reacted in the most blatant, like the reason is because of interest rates. I mean, in the suburbs and in across the country, your payments go to, instead of 2,000, it goes to 3,000, 4,000. In New York, my buyers are going to, well, my payment's going to be $10,000. It went from 5,000 to $10,000. So it's huge, right? So that's why, I'm actually in the middle of and here's my story, right? In the middle of a closing right now. They had to close now to lock in their interest rate. And that's what I'm seeing in the past, I would say, 8 months. It's all about locking in the interest rates. And so all of you, listening across the country, it's really about, how are you going to strategize the closing so that the interest rate doesn't expire? But because we're slowing down in terms of raising the interest rates, but it is still rising. And the big thing is with new buyers right now who need to buy, not the tire kickers, right? It's all about, how they're strategizing when they close, what will their payments be, right? You have to go, okay, if you go into contract now, what will it look like 3, 4, or 5 months later when we close, if it's a co-op? So I think we are going to head into even the less than 5. I would go 5 to 4 in terms of the rankings, 1 through 10. I don't think we'll hit 10 for a while. I would say a couple of years, when it's a raging seller's market and transactions are happening left, right, and center. Remember, if it goes up 6% prices or goes down 10%, it doesn't affect our commission that much, right? As long as you do, out of the now happening 50 contracts signed per week, if you do 1, 2 per month, and if you're in a team, if you do 3 or 4 per month, you're in good shape. But I'm seeing the number of transactions slow down. That is what's concerning, because it's the buyers are spooked, and I don't think they're really going to come back until spring. So what am I doing? I create relationships. I keep that relationship solid, just like during the pandemic. I did a lot of Zoom with people. So now I'm meeting with people, going to and of course the
Antonio, you might have lost you there, buddy. You still there? We might have lost
Leaving us
Antonio.
hanging.
We might have lost Antonio. And he's taking a phone call. It's funny. Antonio is usually super optimistic. So the fact that he said he's concerned about transactions, I'm going to put him down for a 4, but I have a feeling that number may be a little high. We'll see what Tracie has to say. So Tracie, let's go to Tracie.
Well, those of you, thank you, Phil.
Tracie.
And I'm sorry we didn't get to hear the last thing of Antonio's thought, but it's interesting. You guys who know me, I'm super optimistic, the eternal over optimist. And I always do try to keep it realistic, but I Noah, loved hearing your insights, but was shocked to hear how optimistic you are, because I actually am trending, leaning more in my thinking towards Antonio. I would say definitely we are at a 4 as far as the market. And it's so interesting that really does take an average of co-ops, condos, price points, boroughs, Manhattan versus Brooklyn, for example. There's still the case where if I've been trying with amazing cash buyers who just want to place in Tribeca because they want it. They don't care what's going on in the market. They're not bothered by the interest rate fluctuations. We cannot find any inventory for them. So for the perfect 3-bedroom with the view at the right price in Tribeca, it's a 10 sellers market. So taking that in some of the rare cases and then averaging it against the situation where I don't know if you guys are seeing the weekly open house reports that our lovely Fritz used to do, and now Sarah Rotter at BHS has taken over, my girl. People just aren't showing up. So this is the average to come to a 4, where there have been so many open houses where there have been an unheard of 0 attendees for week after week. I'm seeing that with some of my own team listings, and that's across price points and types of apartments too. So yeah, I actually had a monster year until the end of the summer, beginning of the fall, and then things really have slowed and have continued slowing. So again, I'm loving the optimism of the data that Noah talked about, because that's not been what my team or a lot of people in my office's experience has been so far.
Well, one thing, Tracie, I'll say is the beauty of these calls is that a lot of times what we talk about, Noah will see 2 or 3 months from now. So, I mean, I'm getting the sense that if you're seeing things sit there and no one's showing up, there's going to have to be price drops. I mean, it's just the way the numbers work. And then it will appear in numbers in Noah's data,
Exactly right.
Phil,
will say,
I just want to clarify one thing.
Oh, yeah.
Yeah. Sorry, Tracie. Just to clarify, what I'm really saying is the second derivative. I'm seeing the rate of change slow, which is suggestive of a bottom. A deal volume is way down. We're down about 58% from peak levels right now, and we're below trend. So it's definitely slow. But the thing that's not crashing is the price action. The latest, like September, October, November data. It's just the strangest thing. And I think what's going on is a lot of sellers are choosing not to sell. And a lot of sellers are maybe tapping into the rental market. And I think other things are going on. I think a lot of other markets are down 15, 20%. And I think a lot of people thought that Manhattan would be down 15, 20%. And the data is showing us down around 5, 6% right now. And the latest data over the most recent months, even though it's incomplete, it's too early, it's showing up from July and August. That's what the craziest thing is. So it's time will tell. Sorry about that.
No,
No.
Finish your thought. Yeah, thank you. Thanks to Noah for that clarification. Go ahead.
No,
Tracie.
absolutely. And that's so true, because I do have some very opportunistic buyers who are ready to go, but there's just not the inventory. So that's been the frustrating thing. And then just to give you the South Florida perspective, because I'm an agent in Florida as well. It's been really interesting because Florida went, it exceeded its rate of increase when the pandemic hit. Everything was on sale in New York, and in Florida, it was gangbusters. I would say a total 10, I would say a 12 sellers market, actually. And that too has slowed. And while I still expect it to be a busy winter season, I think you're really going to see some things bottoming out and more opportunities for buyers and renters, because the rental market in Florida has been even crazier than New York at its peak in recent months. But an interesting thing that we're running into here is that appraisals are now having issues once again, because banks are now aware, okay, so this great upward trajectory has slowed, and so we're not going to give you the same value because you might have outbid someone, or we see things going down, which has been very interesting. And so it's a different percentage from the contract price depending on the price point. But that's something that I haven't noticed yet in New York, but we didn't go up quite the same percentage as things went in Florida, but that's just another interesting thing. So we're back to that adjective, interesting. Can someone give me another one?
I love it. No, that's really helpful, Tracie. Thank you so much. So Scotty, what are you seeing out there, buddy?
Yes. Hey, everybody. This is so great to do this. I miss doing this. So also, if you don't know, if you're just rejoining the app after a while, they've added also the emoji feature. So if you hold long press on your profile, you can do like a little emoji, like a thumbs up or whatever. So just in case you want to comment, there you go. Very good. Very good, William.
You are our clubhouse sensei, Scotty.
Listen, I just want to make sure we're utilizing the app well here. Okay. Because I really think, like, this has been such a great place to be able to communicate with other real estate brokers, and I speak with a lot of them across the country on this app. I love being a broker in New York City because we are not given the same erratic behavior that most other markets are having. And the problem is the press is going to be saying how much the real estate market is down. If you look at like CNBC real estate, they'll say some markets are down 20%, 30%. Well, some markets have been up 20 or 30% year over year over the last 2 or 3 years. So of course they're going to come down. But have only come down a little bit, as Noah was saying. I think it is interesting because inventory is low. And I've been out with people at both the low and the high ends of the market. After about a day or two of like looking at apartments, and this is at the lower end recently, we ran out of places. Like that was it. I think rates were initially scaring people, and people are starting to come back into the market because rentals haven't gone down significantly. They still scare the crap out of people here. People don't want to spend, people who can't afford something, let's say under $1 million, don't want to spend 5 or 6 grand on a sad 1-bedroom rental in Manhattan. They just don't want to do it. So they are getting back into the market to look. And honestly, if you look at the rates nationwide, we'll hear about, percentage rates being 6.5, 7. Meanwhile, I'm getting rate sheets. I don't know about any of you, but I'm getting rate sheets that are literally just this week 5.25, which is not bad, and anywhere between that and say 6%. Again, not bad. So I think some buyers are starting to come back in the market. So that's sort of what I'm seeing. I'm getting a lot of calls from people who are frustrated with the rentals, who are on a month to month, who kind of want to get back in. The issue is the inventory. I have buyers at the 3 million mark. They're looking for, just a nice 2-bed, 2-bath downtown condo. There's nothing there. As well, on the lower end with my studio 1-bed clients, again, we see everything, and it's like everything's first floor, or everything is not renovated, or whatever the hurdle is. So it's been very hard to find that nice apartment. And if you think about it, it makes a lot of sense. Sellers are not selling because the ones that are selling, they may have locked in. If they bought recently, they may have locked in a 2.5%, 3% rate, and they don't want to get back out in the market for a 6% rate, or even higher if they're going somewhere else. So it makes sense that they're kind of staying, maybe renting out their place if they can. So I'm seeing, if I had to give this a grade, Phil, I'm still saying around 5. I'm seeing some deals out there, by the way. So, but it kind of depends where. On the super lower end, maybe, and then on the kind of arbitrary luxury high end, we're talking in the like 8 to 10 to 12 range, where some of the prices were completely arbitrary at maybe 10 or 12 that are now 8. So it's really interesting out there. And to me, I don't know about everybody else. It's pretty exciting. And then I get a call from friends who are in Long Island real estate who are like, yeah, I just had to basically fire my team because we don't have anything going on. So I feel bad for them. I am grateful to be a New York City broker. And yeah, there are deals out there. So hopefully we can find them.
Thank you, Scotty, so much. So helpful. So Mark D, haven't heard your voice in a while, buddy. So love to hear what you have to say on the market.
Hey guys, good to hear you all and see you all, and thanks for inviting me again to this lovely group. What's going on in the market? Wow, it's been, no one's going to deny it. It's been a tough year. Inventory, like everybody said, has been recently low, but we, not to extend this thing out because I don't want to repeat a lot of stuff that Noah and everybody has been saying, but we actually are seeing a pretty good influx of buyers right now. Like we've picked up probably about 6 buyers in the last 3 weeks, and that hasn't happened all summer. As far as listings and properties are concerned, yeah, the properties that need work are really sitting. Nobody wants to do work. Everything is delayed. I was talking to somebody who just did a renovation. They said they've been waiting 6 months for their Sub-Zero refrigerator. So you know, that's a big issue with a lot of, Scotty with the sad face. Yeah, it's been a lot of problems with that. So we've had some really, but even still, some of the nice apartments that, you know, might have one or two issues to it, like, you know, one room faces the wrong way or something like that. You know, they're not moving as much as they used to because, you know, people are waiting. The interest rates are high, like everybody's saying. But I was talking to Jackie Frank last night, you know, about interest rates, and a lot of people, and including some of my clients, some of my buyers, are doing a 5-year or 7-year, you know, rate, looking to refinance. And I think that's, you know, a smart way of doing it because, you know, these rates are going to come down. You know, they're not going to stay at 6-7%. And even still, you can get, you know, she was telling me you can get like a, you know, a 5-year, 7-year arm for like, you know, around under 5. So, you know, if people keep on listening to CNBC and all the you know, the pundits talking about how terrible the market is, and they don't do the research or talk to a real estate broker like one of us, they're going to get sucked into that mindset. And, you know, I just feel like it's our duty to, like, you know, educate them and make them understand that there are deals to be had if sellers are willing to make those deals. A lot of times what I'm seeing also is properties that are, you know, being traded right now or going to contract are they're having a lot of things going on, like, you know, credit at closing to make the building happy and make the buyer happy and make the seller happy. So there's a lot of moving parts that are going on now that weren't going on before. But suffice it to say, you know, if you're looking at a number, I still say it's a 3-4 buyer's market. Deals are to be had, but buyers, I think, are seeing that right now and are coming into the market right now. I think that's why you're seeing that uptick, Noah.
Awesome, Mark. And Mark, just curious, are you changing your strategy with sellers in terms of pricing, or are you sort of kind of seeing the same data Noah is in terms of pricing isn't getting affected as much as we thought?
I think a lot of sellers are not, they are waiting it out in a way because they're up, you know, some of them are putting their properties that are on the market for sale are now listing it for rent as well and seeing which one comes first, right?
Mm-hmm.
If they want to get sold, they got to drop the price. And I've been telling, you know, a lot of sellers. I was talking to Brian earlier. I brought a buyer to his listing, and, you know, we had the same conversation. They've got to have that flexibility, otherwise they're just going to sit there. And that's what's happening. You know, a lot of properties are sitting there, or a lot of people are not putting their properties on the market. I don't know if we're going to see that huge influx that we usually do of inventory come the first quarter, you know, like we normally do. I think people are going to still wait to see what's happening with the interest rates and hope that, you know, maybe there's a tick down, you know, by the end of the first quarter, and see what's going on.
Awesome, Mark. Thank you so much. So let's move on now to Noemi. Noemi, what are you seeing out there? Great
Hey,
to
oh
see
my
you.
God, this is so refreshing. So I want to say thank you for putting this together. I love listening to everyone. Well, I think listening to everyone and what everyone has said, I think the common denominator here is low inventory. So when we have low inventory, it means that we have nothing to sell, even though we have buyers, just like Mark said, and Tracie, you know, and Scotty. So we do, myself included, I do have buyers. I have nothing to show them. Nothing. Whatever's out there has been out there for a while. And I want to tell you 2 stories that I'm going through right now. I've had a property, Midtown West, literally over a year. I got 2 cash offers within 3 days, which was shocking because I haven't had an offer in a year. So that says something to me. Something's happening because it's not like a prized property or anything like that. It is a condo, but still, I was shocked, and hopefully it'll follow through. And on the flip side, I have a property on the Upper East Side, wonderful property, very well priced. I don't even get an email to show it. I've done open houses week after week. Not one person shows up. I mean, I don't even get a phone call. So I'm telling you 2 separate scenarios that just don't make sense. I listed a property in Brooklyn, a condo. It was in contract within 2 weeks over ask in Canarsie, which is not, one of these neighborhoods that you would think, there are a lot of people going there because there's no mass transit there. So if you want me to put a number on it, I think between a 5 and a 6. I think there are people that are looking to buy. I think that the rates, yes, have an impact, but I also feel that the mortgage brokers have gotten very creative with all their different type of scenarios where they do buy downs, and they're able to really show you how the interest rate doesn't really affect your monthly as much as you think. And I've spoken to a lot of mortgage brokers, just like Mark has, and they've shown me the numbers. And the numbers, since we are able to get into contract at a lower price, the numbers aren't crazy when you look at the monthlies with taxes. So I'm actually optimistic. I think that things are a little scary, and that's why I think everyone's like just holding on. But I think as the months move on, things are going to start stirring up and moving again.
Awesome. Thanks, Naomi. Enjoyed the stories. Very interesting. Tale of two markets here. It seems like a lot of interesting stuff going on. So, Christine Toes, are you with us? Would love to hear your thoughts on the market and maybe Brooklyn. I know you do a lot of Brooklyn. Maybe Brooklyn's a little different than Manhattan. What are you seeing out there?
Hi, everybody. It's Christine Toes from Compass. About 17 years in the business in New York City real estate. I would also give the market a 3, with some rare exceptions, I would say in the Brooklyn market for something that like checks everybody's boxes. We put an 800 square foot 2-bedroom, 1.5 bathroom condo in a townhouse on the market in kind of the Cobble Hill, Borum Hill area. And, despite the 800 square feet and only 1.5 bathrooms, it had like half of the garden. And we listed it at 125, and we had like 5 offers, within a couple days, and it went for 1.41.
Wow.
So, and that was about 2 months ago. But since then, I feel like things have slowed down even in Brooklyn. So I would still give the market a 3, which maybe a 4 in Brooklyn, instead of a 3. So as we've all said many times, unless something is like special and unique, like in a slow market like this, especially kind of during the holidays, don't expect things to fly off the shelves. And I would agree that the sellers I'm talking to now are like absolutely not listing until maybe March or April, because they just feel like this is not a good time to list. It's switched to a buyer's market. They don't have to sell, and they are patient and can wait it out, which I think is maybe a little more unique to the New York City market than some other marketplaces. Co-ops, you have to put down 20, 25%, 30%. Like, so even, in a recession, et cetera, like those people don't have to sell and aren't desperate, and they can just like wait for better times. But at the same time, I'm kind of wondering, like with this, what seems to be an inventory reduction, like I kind of wonder what March, April will look like. But none of us have a crystal ball.
Awesome. Thank you, Christine, so much. So I'll put you down for I guess let's say a 3-ish. Sounds like you might be leaning toward 4 in Brooklyn.
She sounds like a 4. She sounds like a 4. Put it down for a 4.
4 in Brooklyn. How about that? And the buyers that I have now, they're opportunistic. They want a deal.
Yeah,
that's for sure.
Okay. Thank you, Christine, so much. So Scott Harris, I don't think we've heard from you in a while either. Excited to hear your voice. What's going on? What are you seeing out there?
Well, hey, everybody. It's great to be on the call. Sorry, it's been a minute. Scott Harris from Brown Harris Stevens. I'm a 4. I'm a solid 4. I think on balance, I'm seeing definitely great opportunities for buyers out there, but at the same time, if you look at the high end, which is where we do a lot of business, Noah can corroborate this, but something like 10 to 15% of all the contracts signed over the last couple of 3 weeks at least have been at north of $4 million. So the question I asked him, I think, was, what do they know that what do high-end buyers know that everybody else is doesn't know? I think some of the answer is that they're less reliant upon mortgage rates, and people have access to cheaper capital. So that's definitely making a difference. But this market has some really incredible opportunities. And we're having buyers in buildings, really high-end buildings on Central Park West, who are pulling down deals that are already 10 to 15% below last year's prices. And it's a matter of just finding that one opportunity where a seller is ready to do business. So I'll try to keep this short and say that just based on internal numbers at Brown Harris and what I'm hearing about things coming to market, and so many sellers who are sitting on the sidelines, it really does behoove buyers to get into the market and get educated, because the sellers who are on the market are real. They've had their gut check there, and we're hearing about a lot of properties that are going to come to market in the new year. I think Brown Harris has something like $1.5 billion of listings that are probably going to come on early in the year. And most of those sellers are going to be real, or they'll be luxury sellers who are seeing continued strength in the market. So, I'm not saying I'm like over optimistic that there's not a slowdown in deal number, but in terms of just getting deals done, I'm seeing our buyers putting in offers, and a lot of sellers have sold and moved on. They got good deals on whatever they bought, and they're ready to find a qualified buyer and get it done. So I would say it's been a challenge over the last few months to put buyers and sellers together, because it has been a little bit of a gap, and buyers were thinking it's lower than it is. But I'm seeing an opportunity over the next quarter to really get buyers and sellers together, because sellers are like, enough, let's just get this done and move on. So I think that it's not an overall capitulation at some horribly low number that sellers are going to be miserable about. I think there's just deal flow or deal volume rather would probably be reflective. We probably won't see those numbers print until the end of the first quarter, but I think this is the window to get deals done. So, we're telling our buyers to just get out there and get it done. And the agents on this call are, super plugged into their markets. We have a lot of off-market stuff we're talking about. Every agent we know has got listings that sellers are waiting to bring to market. So there's this shadow inventory and a lot of off-market opportunity. I think that's really where our value as agents is going to come in right now, is to put together off-market deals and to really leverage 20 years of market knowledge and wisdom to put deals together with the other agents in our, in the marketplace that we have good relationships with, if that makes sense.
Thanks, Scott. I remember, Scott, you were the agent that called the bottom, I remember, on this call in 2020 after COVID. I don't know. It sounds like you're getting a little optimistic again, that this might be a great time to get in if you're a buyer,
Well,
huh?
I sort of think, what I'm telling sellers, or buyers rather, is, this whole notion of like skate where the puck is going. I really think this is going to stabilize very soon. And so if you put offers a little lower than where the market is, I think you ultimately are not going to miss. I think you'll be basically at a bottom. And as rates start to stabilize, and frankly, just wherever there's more certainty in the market, that buyers are going to feel more confident, and agents like everybody here are going to be able to make a more compelling case that it's time to buy. And I think that the psychology of buyers will get a little rosier. I'm not as negative on the market. I mean, we're going to finish the year very strong in terms of performance. We've got a team of 7 running around, so my sense is that there's a lot of buyer enthusiasm, and sure, there's some buyers who are scared, but I think the case can be made, just like agents have said. Mortgage brokers are getting clear on how to explain where carrying costs really are. And I think all of that's moving to make a much more liquid market.
Great. Thank you, Scott, so much for your
You
thoughts.
bet.
And let's now move on to William Bowles, who actually works in 2 markets. So it'll be interesting to have him talk a little bit about that. But William, where are you seeing the market going? And I'm going to ask you to put a number on it.
I got my number. I got 2 numbers for you. Number one is I added up the combined of all of us as the long that we've been in the business. I think it's 220 plus years of people of knowledge on this call. So kudos to you, Phil, for doing that. I think it's a 5. I think it's right in the middle. And I say that because not only these conversations this morning, but also I was at a networking breakfast earlier, just with real estate agents, and everyone's got a different story about what's going on in their business, and it ranges. And Noemi, I think you summed it up well. It's the property that you can't give away, you feel like, and then it's the one that goes into multiple bids, and it's everything in the middle, and it's all the basics of like, how is it priced, what is the product, right? Is it move-in ready? Where is it sitting? All those things. Sorry, I'm at a train station. Anyway, so I think it's right in the middle. I also think because most of us have been in the business 20 years or more, so we haven't seen this exact market, but we've seen markets so similar to this. And I feel like this is where we add the value. This is where we get the off-market deals done, like Scott was saying. And this is where we just make you hold their hand, you're patient with folks, you explain to them, you try to take the sorry about that, guys. Just let this woman quiet down here. And just let them know that it's going to be okay. And we also know, we don't know when it will happen, but the market is going to change in a weekend, right? Because it always moves as a herd. And you just try to get people, so you get the deals to come together in the meantime. I don't know if that helps, but that's kind of what's in my head.
It does. And William, anything you can talk about in the Connecticut market? I'm just curious.
Yeah. So got super quiet with interest rates, just like because we're sort of like an exurb market. Like I'm far enough out where you can't really commute on a daily basis. So it just got really, really quiet, and it made me so grateful that I still have my New York business, because New York always transacts no matter what.
Yeah, absolutely. Good. And so that would probably be like a 2 or 3. It sounds like in Connecticut.
Yeah, I would put it between a 2 and a 3. The interesting thing, I think, for both markets, maybe many markets around the country, is the inventory thing is what's different this time, because inventory is not growing like it normally would when transactions go down. I think that's what's keeping the pricing up, because we're not seeing pricing fall that much in Connecticut either, because there's just not a lot of good stuff to show people. I was out with buyers in the city on Saturday. We saw 6 things. Once again, total mix of like buyer, listing agents pulling me aside and saying, make a deal, make an offer no matter what. And then an appointment that just got canceled because it had been sitting on the market for 6 months and they just got their deal. So it's so interesting how it's just all over the map. But
hey, William, what part of Connecticut are you talking about?
I'm in Litchfield County and northern Fairfield County, so like an hour and a half north outside the city. Yeah. Okay. So again, it's very much second home driven, but also past 3 years very much driven by people who are definitely getting mortgages and buying $1 million or less homes, and they just suddenly they can't afford it. Yeah.
Awesome. Thank you, William, so much for your thoughts. And Nikki, who's usually first on the call, somehow Nikki wound up to be at the bottom there. I don't know, Nick. I don't like you at the bottom there. Anyway, I'd love to hear your thoughts, what you think about the market, what number would you give it, and what do you have to say?
I would say that I am in between 4 and 5. I was late to the call because I was putting together, looking at a draft of a deal sheet for a buyer who's buying for the first time in New York, was in a multiple bidding scenario, and won because the listing agent was like, Nikki's going to bring us a bulletproof board package. And the buyer who just started looking seriously again about 6 weeks ago. And the key thing here is, what are people motivated by? What is their timeline? we always have people in New York, perhaps more than any other market, where they don't need to sell in order to buy their next property. So the idea that people may be desperate outside of certain situations where the motivation is either, an estate or a divorce, everything else can often be quite discretionary when sort of the deals come together. In this market, the best opportunities for buyers, if you have the liquidity, go look at the properties and put the offers in. Over the last 4 to 5 weeks, the number of times where a listing agent has said to me, if your buyer is really interested, like, give us an offer, the owner is ready to make a deal. And that's where that sort of sleeper opportunity is, I think, over this holiday season, which often happens to me almost every year, which is why I usually don't go very far from New York after December, 15th or 16th. I always have people who sort of pop back in between sort of like Christmas and like the first couple of weeks of January. Yeah, it's definitely very interesting. And I concur with everything everybody has been saying. But I think that we really need to look at each individual's circumstances really, really specifically with a fine-tooth comb. And for some people, it might not be the right time. This is not the right time. It's not the right property. No, they don't want to do the work. But for the people who can, absolutely. Something else I am also seeing is more parents who are starting to buy for kids again, who are in the schools here locally. And even my own financial advisor a few months ago was advising a group of us at a lunch that if we had some discretionary funds, we should be looking at buying real estate. Think about how much is not being built around the country. So real estate is always a good idea. How good an idea it is really depends on your individual circumstances, finances, your property portfolio, lack thereof, all of those elements.
Right. Nikki, just if you don't mind just discussing a little bit about the rental market, because I know you have a pretty robust rental business as well. Anything you're seeing there, any trends?
So my robust rental business is mostly by accident. Basically, my clients say, look, if you sold us the apartment as investments, it's your responsibility to rent them for us and also to manage them. And it's interesting. It feels a little softer for sure. I had a client who was going to buy a couple of condos as luxury condos as investments, still going to do it, but the numbers have changed. So it's still there. This is the best time of year, frankly, to look back at what your business has looked like over the last year, 2 years, be able to make the really compelling contextual comparisons as to what's really going on in the market versus what the media is telling people is going on the market. Touch base with all of your people, have those conversations. This is usually around the time of year that I like to do my here's your equity report on what's going on for your property. It's my opportunity to express gratitude and all of that stuff wrapped into one that always directly impacts my first and second quarter results.
Great thoughts, Nikki. William, did you have a question or a comment? I think you came off mute, but I'm not sure if that was done by mistake or not. Maybe not. So thank you so much, Nikki. Were you finished, Nikki?
But I saw someone in the comment who was talking about Manhattan wait, hold on. I don't have my reading glasses in. I only see Manhattan multifamily. Lulu's asking for comments on Manhattan multifamily properties.
I see. Does anyone want to address that? I don't see the comment. I'm like, whoops. I'm like, every time I go to the messages, I lose where I am.
I'm also old and blind, so I can't see. I think I'll give, I guess, more personal perspective on multifamily investments. I guess I'm a little old school in some ways, where when I was on Wall Street, and I remember one of my first bonuses And the thought in my family was always, you need to have something tangible, and whenever you have the opportunity to buy something, you buy it. And we always look at a long-term horizon. So when I talk to my clients, I'm always looking long range, 1 year, 2 year, 3 year, 5 year, 10 year. And I think that Manhattan is always a good opportunity, especially if the properties that you are looking at buying in the multifamily space have close proximity to, hospitals, schools, things where people will always come in, and you will always have an opportunity to replace an outgoing tenant with a great incoming tenant with very little downside. And I was walking down the street the other day, and a woman said something to the effect of, she doesn't need to live in New York, not at least the way that she used to. So the way that we relate to where we live has been completely transformed by our navigating through this pandemic. However, there are always people who don't have the opportunity to work remotely or work hybrid. Think about the healthcare workers, think about doctors and nurses. So I always look at opportunities to buy investment options that are very close to hospitals and schools and universities, where I can always sort of, quickly replace a tenant. I don't know if that answers your question, Lulu, but if you have more specific questions, I'm happy to chat with you separately.
Thank you, Nikki, so much. Does anyone have any other thoughts? Scotty, I see you came off mute. And before Scotty goes, if anyone has any other comments, just take yourself off mute and I'll call on you. I'm just going to be looking at the group chat here. Go ahead, Scotty.
Sure. I just want to go back in our little time machine 2 years ago. 2 years ago, we were dealing with Real Deal articles that said New York is dead, not to mention all the other articles that said New York is dead. I want us to remember that. And I want us to look where we are now and how we have come out of this pandemic, how we have, taken so many smacks and dings from everybody across the country. And here we are with pretty much stable market over the last couple of years. There's been, a couple blips downward and everything, but, we've been mostly okay. And I want to thank all of Broadway for coming back, which makes people want to be here. And if anybody has been out in New York City, how many great restaurants have popped up in the last year?
Oh my God.
It has been
so many.
remarkable. So when you think about New York is dead, and then you look at what has happened over the last year and a half with everybody coming back because everybody knew New York, you can't kill it no matter what. We are so fortunate to live here. And I'm telling everybody that no matter what, New York will always be here. There'll always be interesting stuff going on. And I just feel so fortunate to be able to work here, to be able to live here, and to be able to proselytize New York City for the rest of the world. So thank you.
Absolutely.
That's so
Amen,
Amen.
Scotty.
Amen.
Amen.
So
Mic drop right there. Loved it.
Right?
Yeah.
So
Antonio,
if anybody
go ahead,
follows
man.
me on social media, I'm out every night at another show, another movie. It's everywhere you go right now. It's packed with people. It's fantastic.
Yeah, I totally agree. It's amazing. Antonio, do you have something you wanted to say?
yeah,
And then I
no.
think Tracie,
First of all, I apologize that I was dealing with the closing and the people were, calling me. The big thing yes, Scotty, I absolutely, New York will never die. And the big thing that I wanted to finish with in the beginning was, I have several buyers and the inventory is really low, but they're never leaving New York. And then to follow what Scotty's saying, they are they came from other states and they built their families here and they're going to retire here. Yes, they may buy a second or third home. But the reason why I just went to the Whitney Museum, I highly recommend it. It's about I went to see Ed Hopper and also the Puerto Rican hurricane from the lens of artists. It was just one of the best things I've ever seen. The schools are incredible here, and the sentiment that I felt, and it's the holiday season. So yes, I went to the sax music and took my family, and it was amazing. And Rockefeller Center and everywhere, every block in the neighborhood, no matter what your belief is, it's just a joyous time. And the tree lighting ceremonies, and remind me of that Dr. Seuss. Even when the Grinch stole everything, people just still came out and sang. And that's the kind of New York spirit that will never die. And the museums, the cultural offerings that we have, and the kind of people that we're around. I mean, the thing to celebrate here, as Scotty has also said, and all of you are saying, is our industry, right? You guys. Yes, I'm dealing with a couple of closings right now that could be problematic, but that comes and goes. But it's the brokers. It's really, when I make a deal with one of you guys, and the couple of brokers I'm dealing with right now, and my team, it's all about how we support each other. And in these times where it's a 3 or 4 or 5, it is it's about self-care for ourselves, and really recognizing each other and celebrating each other. Because without the incredible brokers who are the ambassadors for New York City, I really don't think that we would survive. So many have left our industry, the people who have been here 15, 20 years, I applaud you, and I look forward to doing another deal with you and growing old with you here in New York City.
Thanks. Thank you, Antonio. So much for those words. So, Tracie, do you have something to say? I saw you came off mute before, but I'm not sure if you had
Oh,
anything.
that was just to say amen to Scotty's sermon.
Oh,
And
perfect,
I appreciate it, Antonio's too. It's been really great to be back on with you guys. And as always, I have learned and had some of my own hypotheses verified as well. So thanks so much.
Awesome. We're going to be wrapping up soon, but before we do, Naomi, do you have a comment? And then Noah?
I do, very quickly. I really love what Antonio said, of course, what Scotty said also, but specifically what Antonio said about broker collaboration. I have worked closely with so many brokers that I know many years ago would not have given me the materials or the answers to the questions when I've asked. Just so happens that William Bowles gave me a lot of material for an apartment that I just sold. So thank you. Every broker that I've worked with this year, last year, and after COVID has been amazing.
Thank you, Naomi. Thank you so much. Go ahead, Noah.
Yeah, and listen, you guys, this has been fantastic, and Christmas in New York is just fantastic. And look, it's a good feeling right now. There's a lot of dopamine going through the systems after the last couple of talks that you guys just put out here in the last 5 minutes. Feels good. I just want to shift for a second to macro and just remind everyone, guys, I do think we're in the eye of the storm with this macro thing, with this Fed, with this rates. And if you haven't noticed, the last 4 weeks, rates have come down. I think a couple of people have brought this up. That's probably why some buyers have been perking up lately. I would encourage your buyers to, especially ones that have been waiting for an opportunity, to aggressively look at this time to take advantage of those rates. Because I just want to say, it might last a couple of months, but I'm not sure we're out of this problem yet. And we could face another wave of this rates in Fed terminal and Fed post-terminal curve. There's a lot of expectations. And right now the market expects the Fed to peak out at 5% or thereabouts and then cut rates next year. That's what they expect. If that does not happen, we might have to have another reset, and that's when the markets go through their little upward and shifts. So I just want to say, enjoy this while it lasts, and I would have your buyers take advantage of these lock-in periods while this relief at rates, this period is over us. It may not be forever.
Can I ask Noah a question here? So,
go ahead, please.
Yeah. So Noah, what do you make of the fact that I think it was surprising that the GDP went up 2.9% in the last quarter? Because I think that surprised people. What do you make of it?
Yeah, Look, I don't look at a lot of those economic numbers. I'm not an economist, but I think that until the Fed sees this inflation situation come down, I think rates are going to be higher for longer. And I think the problem of the market is we have a Fed funds futures expectation curve that drives a lot of the credit markets, a lot of those rates, and they're trying to predict where we're going to go and how far we're going to be there. And they're often wrong. And these numbers that we're getting, these GDP numbers, these CPI numbers, it's going to be volatile. And right now it's kind of in a relief period. And I just don't think that, I don't think it's going to last this long. I think you're going to see that slowdown come. I just don't know when it's going to come. The depth and duration. When does it